John Piper with a weekend video, and it's Saturday the 22nd of December. We have Christmas week next week, so markets will generally pretty quiet in the Christmas week. Whether that'll be the case this year I'm not too sure, but they are closed, I think 2 days, maybe 2.5 days, so they can't do that much on those days. Next week after that we've got the new year. I'd expect some, well, fairly dynamic action once trading starts in the new year. We have the various equity markets which have been on life support for so many years now they can't even get excited about Christmas, and we have the more dynamic sort of teenage Bitcoin, which I think is going to be a lot more dynamic this year, but that's something we're looking at now. We have the this is the 2-hour chart. We saw the low here. Right now looks like we've got a 1 here and a 2 to there. Followed by a 1, 2, 3, 4, and 5. This will therefore be the peak of wave 3 in the sequence, followed by this A, B, C decline, which counts as wave 4 of 3. 2 points. Firstly, this little blip here is not sufficient to confirm that as an important low, so it's not clear this decline is over as yet. As such, it could, of course, we could see another leg down. It takes out the peak of 1, and that would negate that count. And this could be a complete ABC, in fact, so that would be, let me clear this. An ABC form would be A, B, and then a 5-part C wave. Rather disproportionate A and C's, but that can happen. So we're still not out of the woods yet. I think there's quite a lot of reasons why the low might well be in here. One other factor I want to look at, I was looking at this chart here. From the low in 2015, the rally and the subsequent decline fits fairly well. Gone below the 78.6 level, obviously. Obviously, in percentage terms, I mean that's in the absolute terms based on numerical values. In percentage terms, 50% low would be there. So a 80% decline would be somewhere down here in percentage terms. But this is only a part of the picture. So although this decline on this chart looks fine, we switch to this. And this chart comes from the Elliott wave theorist, something I've taken for many, many years. Although I did lapse it for a while. The 2015 low was around here. So we've just been looking at this and this. But of course, Bitcoin started in 2010 at a much lower sum, and we have got, according to this chart anyway, 5 waves up from that level, of which the previous chart is just the 5th wave. Now, if that's valid, then it's arguable that this is actually not enough, and we might just see a blip up and then a blip down again, perhaps a significant blip down again. The fundamentals, as I'm aware of them, I mean, Wall Street is getting heavily involved. There's also infrastructure improvements, etc., etc., etc. Suggests this is a more important low, I believe. But I think it's always valid to look at other alternatives. You know, I mean, to get the full picture is fairly important. One of the things I've always stressed with this market is don't risk more than you afford to lose. And that remains the case. So you know, there are always going to be alternative counts, and for my money, the important thing is the form of the value we're looking at the moment, which is yet to make itself clear. In fact, so although there are many positives as I see them, you know, there are alternative viewpoints, and it is true there is perhaps more bullishness around right now than you'd expect at this low. Many people are very quick to, including myself, to expect significant rallies. And that could be a warning sign that there's more to come before this bear market is out of the way. So bear that in mind. It's a different kettle of fish when you're trading this. I mean, I'm talking about people who put money down, buy and hold, which is what I do myself with this market. It's worked very well so far. It worked very well in 2017, not so well in 2018. But obviously you're trading it with stops, so it's a different situation. You haven't got the same amount of money at risk. You can afford to gear up, etc., etc., etc. Anyway, on to the next chart. And the Dow still looks highly negative from this new all-time high around 27,000. In October we got this 5 waves down as a 1, got a 3-part ABC as a 2, which even failed to make the high of the A on the C wave, followed by a 1, ABC2, 1, 2. This counts as a third of a third at the moment, which is pretty unpleasant stuff really. Clearly when you're a third of a third you count acceleration. We had the expiry yesterday, so I wouldn't be at all surprised to see markets fall away next week also, and maybe accelerate into the new year. I'll be obviously watching the chart patterns as we go forwards, but not looking at all good at the moment. Alright, similarly on the DAX, this is the B wave of the ABC from the year end. 1, irregular 2, 1, 2. So again we're right at a 1, 2, possible sharp third wave down, and given how large wave 1 was, which took us down about 1,500 points, this could be quite a significant decline, suggesting a big fall coming in fairly soon now. It's quite interesting, but FTSE is actually at the same price it was 20 years ago, which is quite an interesting statistic. Given inflation, etc., that means that the valuation, that the actual market is down in effect since that time. The wave pattern is possibly encouraging. We've got an ABC to there, B wave, then a 1, 2, 1, 2, 3, 4. This is a possible fifth wave here. 1, 2, 3, 4, 5. So the case there, the FTSE may have seen some kind of low. With the valuations being so, I think Dow is well above its price 20 years ago, as of the DAX, I believe. And there is the Brexit situation, which is depressing FTSE perhaps unnecessarily. So I think there's a case that FTSE might actually buck the trend if there is going to be this downtrend. Given the fact that there is that rather difference in valuations. If people are looking for a safe haven, maybe they'll think of FTSE as being that at the moment in the shorter term. Alright, finally look at gold. We have this what I'm calling a 1 at the moment, and a 2, followed by a 1, 2, and now a 3 in progress. And the 3 itself counts up divide to 1, 2, 3, 4. And a 5, so it could be due a bit of a correction there. As long as it's, it doesn't go too far down, that will be fine, and that will give the scope for the next rally up. It could still be a correction. It's not impossible. This is just an A, a B, a B, and then an ABC C wave. So we're not out of the woods yet on gold either, but that does look encouraging as a fairly good price action. So it just depends on what comes next, as ever. But for now I'm staying my various long positions. Right, that's all for today. Hope you found it interesting and useful. Back to the report after the holiday period. I'm not quite sure precisely what date, but I will advise in due course, but probably just after the new year, with an occasional report if the markets do something that I feel needs some mention. Have a great Christmas and all the best for the new year, and bye for now.